All right, so in conclusion, we like SML Alcoa. It was the last long cycle, it was overbought, whereas previously it had been oversold. Let's try that once again. Yeah, the last long-term trend was overbought. This little pullback was not much. It's now just beginning to be oversold. It's cleared the river, cleared the 200. The regression line slope gave us the early warning here when it crossed the dotted line. The next easy price target is 10, so that looks like the next logical move up. So we like the fact that Alcoa is leading the way. AXP is next, and that's you can see that also had a nice move up. It's cleared the floodplain. It's testing this previous swing high at 50, at 59, excuse me. So it's got to get above that. But the financial sector has been strong, and it put in the this series of higher lows already. So AXP. Looks reasonable. Jaws of PPO just opened again. And we're going to see that on most of the charts. Boeing looks powerful as well. It's had a nice regular run up in this little channel, this little series of oscillations. It has pulled the river out of the lava pits here of the 200, and it's been making consistently higher lows, and the 30-period regression lines being support. Now this is a natural place for it to hesitate and fall back to 75, so don't be in a hurry to chase it. But Boeing was one of the Dow leaders as well. Bank of America, this is what real strength looks like. You can see that the river is expanding. We can barely see the 200-period moving average. You can see how the price is pulling away from the 10, which is pulling away from the 30, which is pulling away from the 50, and everything's up and getting higher, and there's no resistance anywhere in sight back here. So this is just off to the races. That's the finance leader right there, that and J.P. Morgan. So stay long and strong, Bank of America, until proven otherwise. Caterpillar, an emergent strength, just came out of the regression line, just crossed above the zero line back here. Price came out above the 200. The sell-off was only a third of the previous leg up. If that was the leg up off the bottom, the pullback and finding support at 87, and then blasting north. It's a industrial leader, so it's got 3 solid days in a row. It has absolutely cleared this previous resistance at 92, and now it's all systems go up to 120. The last time it was the leader, it went up to 120. So Caterpillar looks really good. It's still early according to the jaws of PPL. So Caterpillar long and strong. Cisco, tech leader, almost the same story as Caterpillar. It's still within its floodplain here, and its previous move up was really strong too. And the sell-off came back just like it's supposed to the Bollinger Band mean, and the slope of the 30 is starting to roll up. So I look for Cisco to continue to lead tech higher. Chevron in the energy sector has some room to go. The next target for it is up here at 117. It's got to get above this double top, but if it does, it's got room to go. The slope of the 30 is very favorable. DuPont is well behind Caterpillar. Although it's put in a series of higher lows, sort of like that, and it's still early in its recovery phase. The slope of the the regression line crossed the zero line right back here. So it's still early. It's only had one leg up. So we would look at 48 and then 50 and then 52 as price targets. I like DuPont in the industrial sector. As long as XLI and XLB are working, that looks pretty good. The jaws of PPO closed a little bit, but still poised to go up. I like DuPont here. It's early in the value play. Disney has shown a nice recovery. Never bet against the mouse. Finding higher lows, and now the 30 should act as a continued support level. And now we'll see here this week if it can close and hold above 52, then that's a double good feeling right there. But it's already well postured. I would play that as a second day momentum play. I kind of like the mouse right there. General Electric, on the other hand, came and hit the top of its out on the floodplain, and then has been failing. And along with it's getting some boost from the financials, but on the tech side, maybe it's suffering. That's a middle of the packer there. I don't see that as there's more danger than joy in GE. Same with Home Depot. The reason to like it is because it was such a strong move up to 65. But the slope of the 30 has just started to turn here. It's still negative. So this is early in its phase. What I would be looking at is probably a pullback to 62 and go, but it's really got to get above 65. The good thing about Home Depot, though, is jaws of PPO have just started to open. It's still, the 200 is nowhere in sight. This could be seen as a long-term support level here above 60. And so if anytime you can buy it under 65, you're gonna be happy with that entry. I would expect it long-term to keep going. Hewlett-Packard is probably the best example of a stealth trade here. This horrible sell-off, big gap down, and then nothing but net going up. The pullback was minor. It's still a long way from its 200-day moving average. So anytime you can buy it with momentum in this circled area, you're getting a great value. It's already moved 20% off the bottom, but it's another 20% just to get to the 200. So that's one I think on a long-term basis you can be thinking about building a swing position there. For the longest while, it was the worst in the Dow. Now it's at the top of the bottom third. So it's moved up off the bottom. It's bypassed 10 other stocks on the basis of this strong move here. So IBM is sort of a grinding value play here in the Dow and in the tech. It's made 3 higher lows, but it has had not much volatility. But the river itself has rolled down and started to go up. The 30 slope of the 30 is positive, but it hasn't. In other words, IBM has not run away from you yet. And if you can get above this 196, then the next thing is it's shooting for 210. So we're still early in the value play there for IBM. My thought is that if we see a broad gains inside tech, I think there will be other symbols that will do better, like Cisco and probably Intel. But IBM is definitely one to catch. It's still early in the recovery phase is what I guess I'm saying. Intel, it has farther to go, so I like it on a value play better, and it's made those higher lows, but it's already above this last little peak, and so all it has to do is get above 22, and then the next stop is 24. So This is really the question mark. Can it get through 22 and hold? And if so, it's got a really nice move to almost 25. Jaws of PPO are open. It's already moved a significant portion off its low. I like Intel here. Johnson & Johnson fully valued, a previous leader. It's really got to get through 72. It's almost there. After it gets through 72, I like it. The 200 period is nowhere in sight. This last little run up was an anomaly, but if you just take a look at the slope of the river, it's just going to keep doing that. I would like to see it pull back around 70 and a half and buy somewhere down in here. But if it gets above 72, you got to own it. JP Morgan, this is what strength in finance looks like. Easy enough to see. Pullback, long, strong move. The pullback here was hardly anything. Made a new swing high. I mean, gee whiz, that's a no-brainer. You can see the strength in finance. Coca-Cola value play made a nice bounce here early. The river is just starting to leave the 200 behind, so I think you're getting Coke at a really good value as long as you can buy it under 39 with momentum. It's going to get above this 38.5 or 39 here and go. So Coke looks good. I'll come back to 3M. 3M, you can again see the basic materials and industrials, the strength here. Really powerful move up. It's leaving the 200 period behind. It's cleared the previous swing high. This is long and strong 3M. You can just see that Caterpillar, 3M, DuPont, all of those are lending strength to the XBI and the XLIs of the world. XLB, XLIs of the world. All good. Merck is a value play. This was one of those that we saw in the tactical setup where the risk to reward is really justified, and that is it hasn't recognized its rebound off the bottom yet. It just now is making the rebound, so you get a chance to buy it at 42.5. A retest of the 10-day high gets it to the blue line with a little risk. You can see it's got a 3-to-1 reward to risk ratio. That's a typical Tortoise value style type of trade. Microsoft, just horrible, but on the other hand, it's put in this solid support down here at 26.5, and you get a chance to buy it down around support, and even getting up to 28 at the top of the channel, you can make that on a 2-to-1 reward to risk basis too. So I actually am starting to like Microsoft. Failure to fail below 26.5, and that's long-term support. So I think you can start thinking about building a swing position here. It's going to take a lot of good news and buying pressure to get this going. But you know, is Microsoft something a large cap and a tech and a U.S. mutual fund has to buy? Yeah, sure. And they're looking at being able to buy it down here around 26.5. And if it just reverses this little harsh sell-off, it's going to get back up to 31 on a dollar risk. That's 5-to-1 reward to risk ratio. How do you not love that? United Technologies I want to look at real quick. Skip over a few. Yeah, United Tech, you can see, was the other tech leader along with Cisco. And this powerful move here on increasing volatility, it's well above previous support levels. Nothing in sight for resistance. The river has left the 200. Everything is pointing to good. UTX is excellent. You know, one of the reasons to be interested in when they first leave the river and they first get above the 200 is that on that, it didn't look as strong back here. And so you get rewarded for taking on that uncertainty when it makes those kinds of moves there. On the other hand, if we want to wait that long, now we have a little more certainty that it's a tech leader, but we give up maybe some of the easier money. But that's just a trade-off. Where in the risk paradigm do you want to be? I like this in Walmart as an example. This is earlier in the. This is a symbol that's early in its value area. I mean, 68 support here, 68 support here. The last time it rose easily to 73. Didn't sell off that much. Not much volatility. Just went overbought. Easy move to 73. Walmart's something somebody's got to buy. You got to own Walmart. That looks easy to me. I like Walmart. Quick look at the ETFs. The ags have suffered so much, and it's at the bottom of the channel. You know, just on an easy basis, it gets up into here with a tight stop. That's a possibility. I like it as a value play. Come back to diamonds. Like the rest of the U.S. indexes, the Dow has pulled up into the floodplain. It's above the previous swing high. It's really got to get above this 135, but once it does, it's off to the races, and the U.S. will be seen as back to business. So strong support here at the 200. That's why we pay attention to it. Meanwhile, emerging markets, everything to love. Well up in the floodplain, powerful risk-on move. Found support at the 200, never looked back. This is the reason we like to see where does it, what does it do when it hits previous resistance. When previous resistance no longer holds, now suddenly that's powerful support. You like it. Look where it emerged out of that just as the 30-period regression line was crossing into the positive. So that's an early indicator from the slope stat. That is a powerful, powerful tool. EFA is basically the same chart, all good. Not quite as strong as the emerging markets, but it's got more money to move. Asia less Japan, massive, good. Even Japan has come out from underneath, but I think the easy money there is made. Brazil looks promising. We'll see the same pattern in ILF here shortly. Finally has emerged from out of the darkness and going to catch up to the rest of the emerging markets here. I think that's a good long-term play. There was good reason to love it back here with washout patterns. Gold, not so much. It's really sold off while the equities have been grinding their way higher. But again, you know, the growth story isn't certain, like anything. And if the U.S. and the indexes fail here, this is going to be a brilliant level of entry for gold with a target of 170. So if you use 170 as your profit target and start managing your risk, you know, $1 or $2 a share, you can buy it anywhere in this region and still have an easy 2-to-1. So I'm not giving up on gold. I am stalking it. Europe is brilliant. Latin America, even stronger than Brazil. It's the same story, but even better than Brazil. So I think it's getting some of its juice from Canada as well. Mexico, excuse me. Russell small caps, better than the diamonds. You can see that clearly voting higher, well above its previous swing high. It's off to the races. And it's, at some point money will start coming out of the emerging markets and Europe and then rotate back into the U.S., and the small caps are going to continue to do well. And I think we're already seeing some of the early risk-on money has already started cycling in. So the small caps are back in business. U.S. real estate is even recovering nicely. Has almost cleared the previous swing high over here. It's got to get above about 67. Treasuries have cracked. They're below that key 120. For the longest time, it had been the trade had been the cyclic trade between 120 and about 130, and now 120 is going to act as resistance for treasuries. Natural gas, basically a washout pattern here. Looks promising for a test of 21. But again, key to the washout pattern is don't believe it. Trade it, but don't believe it. Oil, this is starting to contribute to the energy sector uptick. That looks favorable. The slope of the 30 is positive. This is why the VIX is a 10-to-1 reward to risk on a retracement of the 10-day high, a retest of the 10-day high. This was a superb trade going the other way in SVXY. Strength, we'll look at the XL series as the last little bit. XLB, very powerful. What's not to love? That's what's contributing strength to the Caterpillars, the Alcoas, the DuPonts, the 3Ms. And again, you can just own all of that with XLB. Energy just coming out. Energy's lagging behind a little bit, but still looks good. It has come. The river is up. It left the floodplain behind. It's got to get above 75, but it's close and knocking on the door. Financials just doing. As long as the Fed is printing, then the financials are going to continue to do well. So expanding on large volume on Friday. That's what awesome looks like. U.S. financials, holy smokes. Okay, so that's everything I wanted to cover on the Dow 30s and the ETFs. Should have plenty of ideas about where to follow, where the strength is, where the value plays are, what's early, what's late in the value plays, and who some of the key leaders and laggards are. That's everything I got for you tonight. Next thing I'll do is upload the long version of the report review to YouTube. That's already done, and then get this thing processed and hang it for you as well. So take good care. We'll see you in the chat room. You guys are very welcome.